TOST got a rejection at its 52-week high of $51.45 on the 5th of August. So the underlying trend is a strongly bullish one. Its 200-day moving average is sloping bullishly upwards. So that's that rejection we're talking about. And since that time, the stock has not been able to make a reasonable bounce. But in any case, the stock has been doing well, up 78% over the past year. And this performance outpaces the broader internet software market. What's driving the momentum? Based on its Q2 earnings disclosure, revenue reached 1.55 billion dollars, up 25% year over year, slightly above the consensus estimate from Zacks. Annual recurring revenue rose 31% to $1.9 billion. Expansion is going on rapidly. Added a record 8,500 net new locations, bringing the total to 148,000, up 24% year over year. Over 10,000 live locations now across the enterprise, international, and retail segments, and on track for $100 million in annual recurring revenue. Those newer segments by year end. Significant wins like Firehouse Subs and international expansion into Australia. Product innovation introduced the new TOST Go 3 handheld, featuring a built-in cellular connectivity, lighter build, and 24-hour battery life. Powered by TOST IQ, an AI-driven intelligence engine enhancing order taking, payment processing, and analytics. Upgrade guidance now forecasts 29% growth, up from 26% in fintech and subscription gross profit. EBITDA is lifted to $575 million, previously $550 million, with an expected 32% margin, up 5 percentage points from 2024. Challenges and risks, macro headwinds, tariff escalation and trade tensions could increase costs, squeeze restaurant operators, and reduce discretionary spend on tech. Industry remains vulnerable to consumer demand shifts, labor inflation, and supply chain disruptions. Gross payment volumes is also is also sleeping, while overall the GPV climbed 23% to $50 billion. GPV per location fell 1% year over year. Rising expenses, operating costs, sales and marketing. Operating costs rose 18%, sales and marketing up 28%. Management forecast lower margins in Q4, citing seasonal payment dips and increased tariff costs. Competition intensifying from Oracle, Lightspeed, Blog, and then valuation concerns. Yeah, Zacks value style score F, signifying a stretch valuation. Price to book ratio 12.07 versus industrial average of 66.94x. So the price to book ratio is 12.07x versus industrial average of 6.94% x. So industry investment takeaway, strong narrative for holders. TOAST's robust expansion, innovation, and improved financial guidance make a compelling case for current shareholders to hold. Cautious for new investors. Stretch valuation, micro volatility, and emerging competition suggest new buyers might consider waiting for a better entry point. So this is yeah, you can always pause and read this. So bottom line, um, okay, Toast is enjoying a strong momentum fueled by solid fundamentals and innovation, but valuations look pricey and external pressures could temper performance. If you're already invested, holding may make sense. If you're just joining, it might be worth waiting for more favorable pricing to or clear visibility amid micro risks. So yeah, We have the extrapolation on this daily chart is indicating that the downtrend may continue up till Monday, the 8th of September. And then after that, we might get a consolidation. So the extrapolation is not indicating anything to the upside. However, um, projections are saying that we may have it has the potential to print yeah, it has potential to print 51.45, and below that we have maybe prices like 46.74, 44.76. Those are just light upper projections, but lower prices either way. Lower prices are, yeah, expected to continue to print out as I indicated earlier on. Higher prices, nothing for the 47.82. Its all-time high is $58 or thereabouts. Yeah, if it's 50, nothing really, not that volatile. Yeah, let's see what did I see $63 somewhere now? Nothing like that. Yeah, nothing really. So let's see. Selling pressure must be okay. We're not going to look at the selling pressure. What's going on now? Yeah, okay, pretty much unchanged. So we can look at it. We can look at the price pressure momentum. Okay, so everything is negative. So when the if this is improving, or if it improves to around 0.25, then maybe a buying opportunity would have opened up. But right now, it is not there yet. Not there yet. We could just glance at the 4 hour chart. Maybe we may see a different picture altogether. On the 4 hour chart, let's see what we have here. A consolidation is expected to remain in place up till Tuesday, the 26th of August, and then after that, we might get a decline. Here, things are not looking good at all. Nothing positive here at all. So it's not out of the woods yet. Still very much in on the decline, or rather, well, if you like, attempting to improve. But we would like to see at least the 10-day, the 21-day moving average coming to trend mode. So right now it's still negative. When it gets to 0.25, yeah, there may be a good buying opportunity may have played out. But right now, some risk takers are taking the risk, but we don't think it's out of the woods yet. But it doesn't mean you shouldn't buy. It's up to you if you want to decide if you decide to buy it now. Okay, let's see what we have. 51.51. Yeah, okay. 50.20, 48.07, 45.52. Let's see whether we have anything beyond $58. Nothing. 46.63, 50.42. Yeah. Okay, just have a look and see what you make of TOST. And thank you very much for watching this video.